Good day. Ira Epstein of Linn Associates with your agriculture wrap-up for this Monday, the 9th of December, 2019, just after 3:50 p.m. Central Time. Well, as you can see, mixed day in the grain market. The corn down a little bit, wheat down, beans up. Now, the market has a lot to deal with. Tomorrow, we get the USDA WASDE report, so it's the supply-demand. Expectations are that everything is going to be flat on that. Could always be surprised, but that's what the expectations are. In the energy market, in 2 days, we get to see the Saudi Aramco IPO come out. That'll be the biggest ever. And it's interesting that energy's down just a tad in front of that. And take a look at this hit today in the natural gas. That's really big. And that's one of those markets that made a run to the upside, rather to the downside, had an embedded reading, lost it, and never did get back up to the 18-day average of closes or any of the major moving averages. I think it's a sign of how much more weakness there is coming in that market. Then, of course, we have a mixed day in the stock market as the news waves. If you're watching TV today, all over you're seeing the House Judiciary Committee take over there. You're seeing a small rally in the metal markets, and part of that has to do with hope that come December 15th, something positive happens with U.S.-Chinese trade. But as we take a look at the weekly area chart of closes in soybeans, and I want to come back here. This was when we had that plunge. We got down as low as 876 on a closing basis. We turned around, and now the market's trading literally right back above the 18-week moving average of closes. What I use this average for is bias. When the market is over that average, I have an upside bias, downside under it. But also, when you're way up above it, it's not unusual to come back to challenge it, or under it, back up to challenge it. That's what I use it for. Now, when we take a look at this rally that's unraveling, you can see how the market has been getting a certain amount of short, new covering, new buying, maybe a seasonal low in place. That's what we think here at the Linn Associates. We think that between where this market bottomed out the beginning of December into mid-January possibly, we're just going to get a market that goes back and forth right here. Surprises could come if we hear something very bullish out of the U.S.-Chinese trade deal and the Chinese commit to some crazy number of soybean purchases, but we haven't heard that yet. When you look at the swing line, we still have a pattern of lower highs and certainly lower lows. This is the bounce, but to negate that pattern, you got to get over 930. You're sitting here at 911 3/4. Certainly doable. When we look back and we go back to Friday's action on the daily chart, you were coming up. First resistance I'd call the 18. I got that labeled wrong. Should be the 18-day moving average of closes, and then this should be the 100. I've just got the wrong labels on. I apologize. The resistance now, I'm going to look at the 920 level as one of the key resistance, the 100-day average since you got through the 18. And momentum, well, you lost the embedded reading, as you can see last Thursday. When you lose an embedded reading and you don't get it back immediately, which you did not on Friday, the goal is to get to the 18-day average of closes or the closest moving average. And as you can see, the 100-day is above it, so you're sitting there with that average. In the meal market, and by the way, do pay attention. I moved to the March beans away from the Jan, and now we're in the March meal and March soybean oil. The reason is January's right in front of us. Why not just move out to the next month after that? You don't want to get delivery possibilities. When we look at this, we still have the higher with the lower highs, the lower low. The market is fighting a battle 3 days in a row with the 18-day average in red. Again in here, we lost the momentum. You had it here on Wednesday. Thursday, you lose it. You didn't get it back right away, but you'd already hit the 18-day average. So now getting the market to pull back, not a surprise. It did try to get up today as high as the 100-day average. 306.70 was today's high. 307's that number. I'm going to call this market now getting itself ready for tomorrow's USDA report. Same in soy oil. If you know nothing else, the first challenge of a Bollinger Band is often a resistance area. And that's what these black lines represent, Bollinger Bands. In addition, you've got momentum pointing to the upside today. Not quite overbought, but getting there. The settlement was 31.86, just over the upper Bollinger Band, but you haven't been trending. You've got a lower low, higher high. The fact that the oil market is much stronger than the meal doesn't bode well, in my opinion, for a lasting bull run. In the corn market, looking at the March contract, we have a pattern of higher lows, higher highs. It's countered because the market is under the 18-day average, so the bias is down and momentum is still pointing down. I call this a nothing market. In the wheat market, when we got up to the upper Bollinger Band through here, one of the things that you watch for, of course, is to see how the market does as it stays there. Right here, we got underneath that previous low. So what we have now is a pattern of higher lows but lower highs, and the market's not looking all that good. And today what the market did is it actually did this on Friday. And remember, we only show the weekly charts on a Friday. The market had a reversal, followed through. This is Friday's action. At that point, you had lower highs, lower lows. I would say that the pros are going to look at resistance at the 522 level, and that's probably just about what they're doing. You finish 522 3/4. But again, I think a lot of people just step back, they let the USDA reports come out, and then they attack the market differently. The sugar market has really not looked back since crossing the 13-cent level. And that was a level it had not touched for months on end. And the market is now working the shorts in this market out as it just keeps putting them under pressure. Now, how many days do we have in a row over the upper Bollinger Band? We're certainly over it today. We were over it on Thursday. If you come to this action on let me take this back. This is Monday, over it. This is Friday, over it. This is Thursday, over it. And on this particular day, we were 1306 over it. So that was Wednesday. Prior to that, we were under it. You got 4 days in a row over it. It's rare that you go beyond 5. So I'm looking at any point here for this market to work itself back down. That is not a top. The fact that the market's staying that strong is a sign of weakness, and you've got to pay attention to the slow stochastic. Both numbers are over 80 today. Both were over 80 on Friday, not the day before. So you're overbought. It takes 3 days to embed. Will the market be able to do it tomorrow? It can do it and still pull back under that upper Bollinger Band. In the coffee market, if you get my morning subscriber video, I said, this is just a powerhouse market. And as it was pulling back, and you got that early on today, the goal was back to the upper Bollinger Band as long as you have that embedded reading, and you have it. I'm wondering if sugar's not going to get a pattern like that. That's what I'm waiting to see. In the cocoa market, you have higher lows, but you're staying under the 18-day average. So the bias is down, the swing line is up, and momentum is corrected, past tense, and oversold condition. So the market is now, as you can see, in the upper and lower Bollinger Bands, the black lines, narrowing itself in, getting ready for another move, possibly a new trend. I don't know. In the cotton market, prices finished at 65.38. The 18-day average is 65.31. So we have the bias up. You had a correction that got back over a rally high back here on Friday. So you've got a higher high, lower low, sideways action going into the USDA report tomorrow. Cattle market. Cattle was able today to get to 125.80. Now, this was the last rally high right here at 125.87.5. Didn't quite clear those highs. That's my point. And the market still ended up at 124.75. I think the pros were selling the market at the 18-day average. They'd be knocked out if you took out that high. And the reason is it would change the pattern of lower highs, lower lows. In the feeder cattle, still bearish as I see it. Lower highs, lower low, resistance, the 18-day average. Take out 143.27.5, you negate that. Hog market. If beans were up because of China and the talk that it wasn't a seasonal low, but something else, you would have thought that pork would rise too, because we keep hearing that the U.S. keeps talking about pork and soybeans. I mean, that's just what you keep hearing out of them, yet this market's not able to do it. Challenges of the 18-day average, it's rare that we're staying above it. You are in a market that is in oversold territory and not trending in any manner. So I look at it and try to figure out what's going on, and that's never easy going into key government reports. And tomorrow's report, while we don't expect any major changes, we don't know. It comes out at 11 o'clock in the morning. From there, we'll be writing all of our reports. So if you're looking for analysis as to these reports, we send them out by email, and you can also get them in our charting software, our mobile platforms. That's how we work with our clientele. These are the markets that we cover, at least the categories for you. If you'd be interested in seeing what we write, how we write it, options, futures, what the hedgers are doing, well, all you need to do is give us a phone call at 866-973-2077 or go to our website. On the bottom right, you'll see sign up for free offers. Do so, and we'll get this in your hands. In the meantime, I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.